Hello and welcome to this Friday's morning market briefing. We've got a lot to talk about, but firstly, Tesla strikes in Sweden are insane, says Elon Musk, as well as that Germany to suspend borrowing limits for fourth year after debt break ruling in Germany's highest court. We've got a lot to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the ends, so make sure you stay around till you see that. Before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is Elon Musk. Now, Elon Musk has branded an escalating strike of Swedish unions against Tesla insane, with this threatening to disrupt the US car makers' operations in other parts of Europe. Now, we've been routinely almost talking about strikes within US car manufacturers, mainly around the UAW, the United Auto Workers Association, I believe, or maybe it's a bit of a different name, but this union especially has been targeting those key Detroit car makers, such as Ford, such as General Motors and others, and as a result they've had to take a deal on pay rises and improved work conditions, which wouldn't have been expected otherwise. And the thought was, could this spread to other car manufacturers? And so that was mainly the kind of topic that we were covering in relation to car manufacturers and strikes. But this kind of topic has now come up on the topic of Tesla strikes, and moving away from the US, we're now more so talking about Europe. Now, we understand that Europe, especially Scandinavia, in the sense of Sweden here, has a much stronger union culture. It's quite common to understand that if you join one of these sort of one of these kind of workplaces, that you will join a union along with that, and that's kind of how you get your rate, your fair wage, and therefore any car manufacturer from the US that does kind of go into this sort of industry may actually kind of have that shock and surprise of the way that I guess worker relations are in relation to the company. And as we can see here, the head of Tesla, Elon Musk, is now branding kind of almost the work culture and the work kind of union culture as insane in this series of industrial action that we are seeing, with 130 mechanics last week going on strike following Tesla rejecting their request to collective bargaining. And collective bargaining is something that we do see across Scandinavia, Norway, Sweden in particular. And as a result, it's no surprise that we're now seeing this collective walkout by many workers, with dock workers and car dealers since refusing to work with the brand in sympathy. With the brand in sympathy, and this is kind of something that we could actually see escalate further, in the sense of we are seeing people within different stages of the production line and process of Tesla cars also going on strike, and this puts at risk the entirety of Tesla production and sales within Europe itself. Obviously Europe is a very large market for Tesla, and losing that market as a result of increased industrial action will be highly detrimental to Tesla. And so this is why it's so important to stay on top of, as this will be influencing Tesla's stock, of course. With the latest strike by postal workers, meaning Tesla won't have their license plates delivered to their customers, key kind of targeting of certain parts of the production line. Now, the risk for Tesla is whether unions in other nations like Germany also join, as we across Europe, many nations kind of have this strong union culture, and as a result it puts at risk Tesla as a whole, as as we've seen before, unions can join in solidarity even if that's across nations' borders. Now, Musk did respond to the situation by calling it insane on his platform of X. Obviously that being formerly known as Twitter, with Tesla's Berlin factory now accounting for near 3/4 of all models it sells in the region of Europe. So, very, very significant. So if that's shut down, obviously this is going to have a very detrimental impact on Tesla's sales within the region. With Sweden, however, being a modest market for the car maker and dwarfed by its main markets of the UK and Germany and France, but Tesla may also face rising demands for unionization elsewhere in its global network. So we're not even just talking about the EU here. This is something that could spread outside of Europe into, the US in particular, where obviously they have their biggest market share, with the UAW in the US targeting Tesla as it aims to widen its base beyond usual car makers such as Ford and GM, where they did secure that kind of deal. And so keep your eyes on this, as this will be highly influential and highly impactful to Tesla, of course. But next to talk about is Germany, which is to suspend borrowing limits for fourth year after debt break ruling. And Germany is to suspend its constitutional limit on new borrowing for the fourth year running, and this comes in the fallout of a ruling by Germany's top court, which has left its spending plans in disarray, with the German finance minister saying he would present Parliament with a supplementary budget for 2023, which would put spending on a constitutional footing. Now, Germany's been, in a tough situation, like many European nations, for the past 5 years, really, or maybe 4 years in particular to this article. What might that be? Well, the key thing here is the issue of COVID, which obviously shut down economies worldwide. But then what followed that, just as these economies such as Germany were kind of emerging and, improving, we did then see Russia's invasion into Ukraine, which did bring, sanctions on Russia, which did bring, increased oil prices for Germany, and therefore, brought crazy inflation for Germany, and, a large issue for the government, of course. And this has obviously created numerous kind of political issues as well, with new parties promising change and that sort of thing. But to be honest, the key thing is Germany's in trouble with its economy, and therefore they're in a really difficult situation. And this is why we're now seeing, Germany suspend its borrowing limits once again. Because as we've been talking about, we have been seeing that high inflation in Germany, but we've also been seeing, that slowdown in its key industrial sectors, such as automobile manufacturing, kind of going back to the last article there, but, Germany has seen a contraction in that output, with many companies kind of citing the numerous reasons, including high costs and that sort of thing, and therefore it's no surprise that Germany is looking to kind of find its way out of this by suspending borrowing limits once again, and saying that the Parliament would retroactively declare 2023 an exceptional emergency, which would allow it to set aside its debt break. And this is very key, as it does allow Germany to continue borrowing past the usual debt break, and as a result expand its size of borrowing against its GDP, but kind of deal with the short-term issues. And the question is this sustainable for Germany? This is the fourth year now that they have suspended the debt break ruling. This kind of wears down on their credit rating as well internationally. If you think about it, it wears down the ability for the government to be able to prove itself as a government which holds itself to its word on an international scale, and in this sense of borrowing limits and that sort of thing. And the minister had insisted that the debt break be reinstated this year. So it's damaging his credibility as well, as he is someone which did want to reinstate that borrowing limit. He is someone which is more hawkish fiscally, and yet even him is now happy to suspend borrowing limits, which is not good as a sign for the way that Germany is going economically. With the ruling being that the government could not transfer unused borrowing capacity from the pandemic to a climate and transformation fund, triggered the announcement, of course. And this is worrying because now it's forcing Germany to expand its kind of borrowing even greater, but also kind of having that clash between those two levels, the kind of political branches of the government, that being the judiciary, executive and legislative. Having that clash also damages the country's reputation even more, with the debt break being put aside during national emergency usually, but with it usually limiting the government's deficit to 0.35% of GDP adjusted for the economic cycle. So that's being put aside now because they're declaring a national emergency, with the government therefore looking to not take on any new debt, but simply put the money spent this year on responding to Germany's many crises on a sound legal basis. So taking that money that would have been used, before in the pandemic, and using it now in this year as there's exceptional circumstances. And the finance ministry officials do say, declaring 2023 as an emergency would be uncontroversial considering the damaging economic conditions that we're seeing. So keep your eyes on this as the story does develop. But next to talk about is the the chart, with the US indices being in an interesting position, as the US 30 over here does continue to push into this strong area of liquidity and resistance. As we can see here, price has been pushing to the upside since the start of November, but kind of since the start of Tuesday the 14th, we have started to see that kind of slowdown consolidation on the US 30. We were looking to see whether it forms another range like we've seen before, but it has seemingly continued to trend to the upside, as we can see with this trend line. But at the same time, whilst it is trending up, we still are seeing that lack of momentum. And now as price does move into this strong area of liquidity, the first area of resistance really that we highlighted following this one, price is slowing down and wicking into that area of liquidity. So the question is, as we are also seeing this bearish divergence, will US indices now turn around and take a move to the downside? And that's the real question to note. We do have this bearish divergence, so definitely keep your eyes on that. This is in a very interesting position as the momentum is slowing down as well. So keep your eyes on that. But next to talk about is the dollar, which is in a position of not too much interest, to be honest. So the dollar isn't doing too much. Obviously, we've seen dollars sell off most recently, but after starting this week, we did kind of see the dollar respond to the upside, kind of retrace itself a little bit, take a move to the upside, which is why we kind of drew out these Fibonacci levels to look where price might move up to before taking a swing to the downside once again. But it does seem that price has reacted to that 6180 Fibonacci area, but it hasn't taken that strong bearish move to the downside, which we might expect from a reaction to the 6180. And therefore, we're questioning where the dollar might go from here. What's the plan for the dollar? As it is kind of stagnating and consolidating around these areas. If we draw out this, we've kind of got a flag. So I want to see where price goes from within this area going into next week. Next talk about though is Euro USD, as we were just talking about the dollar. It's a similar story. So price didn't break below this prior lower higher low, and therefore we're still maintaining that bullish kind of trajectory for Euro USD. But really, if we want to keep that kind of bullish trajectory going, we expect to see price break above these prior highs and continue that move to the upside. But we haven't seen that yet, and price is just sitting around the midpoint of that most recent price action, so it's hard to say where price might now go. Next to talk about though is pound yen, which, after taking this liquidity out over here, we have seen that significant move to the upside. We did draw out the fibs as potential areas which price might interact with and maybe slow down or possibly reverse, as this was kind of some very bearish price action. But despite that, prices pushed through that 61.80 despite presenting some bearish signals over there, and has pushed above that and is now tapping the 78.60. And the question is, will price react in a bearish manner to this level, or will it continue higher, as this was kind of quite a bearish kind of signal with the way the price action was shaping up, and we were kind of expecting a move to the downside maybe, but pound has stayed quite strong after tapping this area of liquidity. So the question is, where can price now go? Next to talk about though is Bitcoin, which not much to talk about apart from the fact that it's continuing its range around this area. I guess this is an important area to kind of highlight for the bottom of the range. Obviously, we did break up below there, but price hasn't returned to that level since, and price has really just been kind of bouncing around in this area. So it'd be interesting to see where price may go. And this area of price is around the 36,000 level and the 38,000 level. So as long as price stays within there, we're ranging. So it'll be interesting to see whether we can break out of this level, as price is very volatile at the moment. Next to talk about though is gold, which obviously has had that strong kind of bullish momentum since mid-November, after tapping that 38.20 and liquidity level, and it's been pushing to the upside in a quite a significant manner. But after interacting with this strong area of sell side liquidity and resistance, price hasn't been able to break above that and move higher. So we're really looking to see here whether price can gain enough liquidity to finally break above that level. But as we did highlight here, there was a bearish divergence, a small one. So we did highlight the possible chances that with a bearish divergence, with price interacting with this strong area of resistance, price could reverse and take a move to the downside in a significant way. So keep your eyes on that. Next to talk about though is Tesla, which as a result of the strikes has seen a bit of a sell-off, but this is the stock to really be looking out for, as Tesla does continue to interact and deal with these issues around strikes. So keep your eyes on Tesla as a result. Next to talk about though, and lastly on the charts, is Brent crude oil, which has kind of been stagnating around this area, but sitting just above that $80 a barrel mark. And now the question is, as we do remain within this kind of flag, where will price go? Will it stay above the $80 a mark, $80 a barrel mark, with the only previous price action just quickly breaking below and breaking back up? Or will it continue and move to downside after tapping that 78.60 level? So keep your eyes on this. But that's all to talk about on the charts. Lastly to talk about, of course, is the economic calendar, with quite a bit of data coming out today, but not too significant data to talk about. So firstly, we will have the UK's consumer confidence figure coming out. So listen out for that. We are expecting, improvements, but still, negative kind of forecast. Now, now German GDP growth rate figure is also expected today, and we are expecting a contraction on a year-on-year basis. This is very important to look out for, as just as we was talking about with Germany and their economic struggles. Understanding the German economic situation, as it is the key economy within the Eurozone, is very important. Next talk about though, we will have German business confidence data coming out today, so listen out for that, as well as the ECB's President Lagarde's speech. Obviously she runs the ECB, she's the key figurehead, and so it's important to hear from her to understand the ECB's monetary policy. But also we will have Canadian retail sales data, so listen out for that. And then finally, US manufacturing and services data, so that's an important one as well. But we've covered a lot on the articles, we've covered a lot on the charts, and we've gone through all the economic data coming out today. Hope you have a great trading day and also enjoy your weekend as we do go into it. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.